Everybody, thank you for coming along this evening. Our objective is to become a leading player in the investment market across Asia. We're the only quoted company in London that does what we do, so we invest across Asia. We have historically invested mainly in China, but we're starting to diversify out of that. In May last year, the company appointed Harmony Capital as our investment manager, and Harmony is led by Suresh, who will talk to you in a minute.
First of all, thank you very much for coming. So we took over managing ADAM in May of 2017. The results are just out, as John mentioned, for at least the period ending 31 December. My team and I have been fully focused for the last 12 months, essentially in dealing with the legacy portfolio that we inherited. All of that portfolio was invested in China because historically ADAM was a China-focused private credit investment company. We changed that policy with the acceptance of the board and shareholders in May last year. And only recently have we started to deploy capital again in terms of making new investments under that new investment policy. So our first investment that was announced to the market in March of this year was in a digital healthcare company called DocDoc. There's an announcement in March. It's a patient empowerment company that's based in Singapore. So our first investment outside of China, but a company that's obviously looking to grow rapidly in Asia because healthcare, private healthcare, access to healthcare is a thematic that is very, very strong and a very strong investment theme in Asia generally, and certainly healthcare is a focus for us as Harmony Capital in terms of where we're looking for opportunities. In addition to that, we've also, as John mentioned, started to diversify away from China. That does not mean that we're not looking at China as an investment destination. We are selectively looking at China, but more focused now on investing in countries outside of China. So countries where we are currently actively engaged with counterparties on transactions include countries such as Singapore, where I mentioned, Australia, Indonesia, Korea, Japan, Vietnam, and these are all countries that provide very interesting and exciting opportunities geographically. In terms of sectors, include, as I mentioned, healthcare, but leisure and tourism. We're quite active in that space at the moment in terms of a number of conversations we're having. Fintech, that just gives you a little bit of a sense, hopefully, of some of the sectors where myself, my team are very actively engaged. We're continuing to look for middle market or SME companies, as we call them here, which are really our target focus. These are companies that are finding it hard to raise money from banks because the banks, as you would know, in Asia have vacated the SME space. Most banks, for regulatory reasons or otherwise, don't lend to small companies very actively anymore. And those companies are too small to access capital markets. And the capital markets are very underdeveloped in Asia relative to London. So that creates a huge financing opportunity for private investors like ADAM. And as John mentioned, we're the only such company or such investment vehicle that's actually listed and quoted here in the UK market that's looking for Pan-Asian opportunities in the SME space. So it's really exciting times. One interesting aspect of ADAM is that because we're a permanent capital vehicle or an evergreen vehicle, we're not a fund like people are typically used to, where we have a 10-year life or we have a 5-year life, or if we're a hedge fund, we have no life, we can end within 3 months. The point being that as a permanent capital vehicle, ADAM has a distinct advantage in Asia and especially in the SME sector, because we can offer what's known as patient capital. So whenever we're dealing with entrepreneurs or counterparties or companies, our first pitch to them is, look, the reason you want to do business with us is because we're patient capital, but that comes at a cost. What we try to do and what our team is good at doing is looking at a company and trying to figure out where is the best part of the capital structure that we want to invest in. And right now, because the board has instructed us as the investment manager to reposition our portfolio for income and for growth, we are typically investing in companies where we can structure our investment as either a convertible bond or some kind of secured debt with some warrants or royalties or equity upside, but where we have the protection of some kind of asset base below us. And so it's important to have some of that protection. And what we find is when we're dealing with these SMEs, these middle market companies, they're much more receptive to having a discussion with a party like ourselves about structuring transactions, that oftentimes people will come to us and say, well, we're selling 25% of our company, would you like to buy it? And we say, no, we're not interested in buying your company or buying a 25% stake. However, would you take our money in a structured note, for example, where we get some security over your assets, and then we will find another way to get some upside. And suddenly the conversation changes, but we are in a position now to drive the conversation in terms of how we structure the transaction. Right, thank you very much again.